10 easy steps to getting a commercial revolving line of credit. Call 888-653-0124 today or click the link in the description to learn more. A commercial revolving line of credit is a type of loan used by businesses to finance their day-to-day operations. They offer flexible terms, low interest rates, and quick approval times. As a small business owner, you may need a commercial revolving line of credit to cover short-term expenses such as payroll, advertising, inventory purchases, etc. But what happens when you need to take care of longer-term needs such as equipment purchases, office renovations, or even a new hire? Here are 10 steps to get started with a commercial revolving line of credit. 1. Find your lender. Getting business lending guidance from a bank or other financial institution requires a lot of time and effort. Instead, consider using online resources to find a lender who will provide the services you need. Online lenders offer quick turnaround times and usually charge lower rates than banks. They typically require less documentation and don't take into consideration your credit score or history. A business credit evaluation is required for most types of loans, including commercial lines of credit. It helps determine whether you have enough collateral, assets, to secure the loan. The following factors are considered in determining the value of your assets. 1. Current cash flow. 2. Inventory valuation. 3. Accounts receivable. 4. Equity in real estate. 5. Equipment. Lines of credit require collateral to be posted as security. You must also submit a personal guarantee if you do not own the collateral listed above. Conditional approval terms are common for commercial lines of credit. These terms stipulate the borrower must meet specific conditions before the loan becomes fully approved. 2. Determine how much you need. Before applying for a commercial revolving line of credit, make sure you know exactly how much you need. The first step in getting a commercial revolving line of credit is determining how much you need. There are many factors that go into calculating the amount needed for a revolving line of credit, including your industry, location, and current cash flow. This also includes things like 1. Payroll. 2. Office supplies. 3. Advertising. 4. Inventory. 5. Purchases for your business. Business assets should be included in the total. For example, if you own a car dealership, include the vehicle price in your calculations. 3. Get pre-qualified. With some lenders, you can begin getting pre-qualified right away. Others will ask for additional information before they give you a conclusive answer. In either case, you want to start the process as soon as possible so you can focus on growing your business rather than worrying about financing. An agreed-upon credit limit is determined at the beginning of the application process. Once approved, you can then decide which type of loan best suits your situation. A maximum credit limit is the highest amount of money you're allowed to borrow. Typically, the higher the credit limit, the more expensive the rate you'll be charged. Grocery price hikes will feel the effect for months. CNN video. Source: CNN.com. 3a. Understand your terms. Once you know how much you need, you should also understand the terms associated with the loan. Some lenders offer fixed-rate loans, while others offer variable-rate loans. Fixed-rate loans are always at a set rate throughout the life of the loan. Variable-rate loans change depending on market conditions. Convenience check transfers allow you to transfer funds between checking accounts without incurring fees. However, there may be restrictions on when you can make these transactions. Balance transfer check transactions are like convenience checks, but are used to move balances between different checking accounts. These transfers can be done up to 6 months after the original transaction was made. A balance transfer fee is added to the amount being transferred. This fee varies based on the size of the transfer. The interest rate you're charged depends on the time you choose to keep the loan. Most lenders offer 0% APR for the first 12 months. After that, the interest rate increases from 1% to 25%. The minimum payment is usually the same regardless of the length of the loan term. 4. Analyze financial statements, for example, profit/loss statement, cash flow. Business expansion often means increasing your spending. But before you spend more, it's important to analyze your financial statements. Make sure you have accurate numbers for your profit/loss statement and cash flow. If you're looking to grow your business, one way to do so is by adding new products or services. This could mean offering different insurance policies, selling more online, or expanding into new markets. It may also involve taking on additional staff. 4a. Calculate gross income. After analyzing your financial statements, calculate gross income. Gross income is the total revenue minus expenses. Gross income is used as the basis for figuring out what you need to borrow. The higher your gross income, the bigger the loan you qualify for. Business receivables are another way to measure your company's ability to generate sales. Business receivables are amounts owed to your company by customers. They represent the amount of money you expect to receive from your customers. 4b. Calculate net income. Calculate net income after subtracting taxes from gross income. Net income is then divided by either 1, the number of months in which the loan is expected to run, or 2, the daily interest rate. This calculation gives you your monthly payment. Business experts recommend using the number of months in the loan term when figuring out how much you need. This provides stability since there won't be fluctuations in your payments based on changes in the economy. How to let customers know about a price increase without making them mad. Source: blog.hubspot.com. 5. Prepare a loan request package. After analyzing your financial statements, prepare the documents required for the loan. These documents include: 1. Business plan. 2. Bank references. 3. Income tax returns. It should include your business model and projections in your business plan. You should also provide bank references showing that you have access to enough funds to cover the loan. Finally, your income tax returns should show that you are eligible for a loan. The business objective should also include business opportunities that would make sense for your company. Financial decisions like these will help you determine whether a loan is right for your company. 6. Present your request to the bank's lending committee. Submitting your request to the bank's lending committee is usually the first step toward getting approved for a commercial loan. The committee will review your application and decide whether they want to approve your loan. Capital expansion can help increase your profits. However, if you don't have enough capital to meet your needs, your company might fail. That's why it's important that you get the right funding for your business. To get approval, you must meet all requirements listed in the loan agreement. Once the lending committee approves your loan, you can begin negotiating the terms of the loan. 6a. Negotiate terms of the loan agreement. You can negotiate several key points in the loan agreement. A payment information disclosure statement, PIDS, for example, shows you exactly how much you'll repay each month. Other items to consider negotiating include: 1. Interest rate. 2. Amount of the loan. 3. Term length. 4. Payment flexibility schedule. 5. How long you will take advantage of the low interest rates before being charged a penalty fee. Business lines of credit are loans used to finance purchases made with cash flow rather than assets. They allow businesses to buy inventory without putting up collateral. In order to qualify for a business line of credit, you must have an excellent history of making timely payments. 7. Secure financing quickly and without hassles. Need to learn the other 3 steps? Call 888-653-0124 today or click the link in the description to learn more.